Welcome back to the DINAR Community channel, your reliable source for deep dives into global monetary transformations. In a development that experts are calling a turning point for Iraq's economic sovereignty, the country's official Gazette has formally announced a monumental legal shift. The Central Bank of Iraq (CBI) has been granted full and independent control over Iraq's foreign exchange operations. This isn't just another administrative adjustment, it's a historic redefinition of Iraq's monetary policy framework. For nearly 20 years, the CBI has operated under a web of overlapping regulations, political influence, and restricted autonomy. Now, for the first time since the early 2000s, the institution is empowered to act without needing prior sign-off from other branches of government. With this legislative move, Iraq has entered a new financial chapter. The CBI's newfound independence enables it to set exchange rates, supervise cross-border transfers, and implement liquidity strategies with agility and transparency, critical components for aligning with international banking standards. Many economists are calling this the most impactful policy change since Iraq began its post-conflict economic rebuilding in 2003. This sweeping reform carries significant weight for foreign currency investors, particularly those holding Iraqi dinar, Vietnamese dong, or Zimbabwean dollars. The financial world is taking notice. With Iraq's political leadership standing behind this change, market watchers see a united front that could finally position Iraq as a legitimate and competitive player in the global financial system. The legal ratification, published in Iraq's National Gazette, confers sweeping, independent authority to the CBI. It can now move swiftly on monetary matters that were previously stalled by bureaucracy. Where once financial decisions were delayed by ministries or parliamentary bottlenecks, the CBI can now execute policy with precision. Analysts view this as a critical prerequisite for macroeconomic stability and modernization. Global reaction has been swift. Bloomberg reports an uptick in Iraqi dinar trading volume, particularly among institutional investors who had previously avoided Iraqi assets due to chronic political instability. Forecasts now anticipate gradual appreciation of the dinar over the coming quarters, driven by increased investor confidence and proactive monetary management. Interestingly, the ripple effect is extending to other undervalued currencies. The Vietnamese dong and Zimbabwean dollar, often mentioned alongside the dinar in speculative circles, are receiving renewed attention as investors begin identifying overlapping reform efforts in their respective central banks. The emergence of Iraq as a financial reform model may encourage similar paths in Vietnam and Zimbabwe. The Central Bank of Iraq is expected to unveil a multi-pronged monetary modernization strategy in the coming months. This won't only impact the value of the dinar, it will reshape Iraq's entire monetary system. Top priorities include transparent exchange rate management, tighter regulation of remittance flows, FATF compliance, and perhaps the launch of a digital currency settlement platform. Sources inside the CBI report that preparations are already underway to roll out real-time foreign reserve auditing systems, reduce reliance on the US dollar in transactions, and establish global reporting protocols. This marks a move away from reactive monetary behavior toward a planned, future-oriented financial strategy. The IMF and World Bank have not yet issued official statements, but insiders suggest both organizations are reviewing Iraq's eligibility for a credit rating upgrade by the end of 2025. Currency traders have already begun integrating these potential reforms into their models, with a growing consensus around moderate to strong dinar appreciation trajectories. Vietnam and Zimbabwe are watching closely. Both nations struggle with central banking challenges, inflationary concerns, and the absence of strong digital currency infrastructure. Iraq's reform blueprint, backed by legislation and clear implementation signals, could serve as a roadmap for these countries to follow. Execution, of course, remains the key. CBI Governor Ali Mohsen Al-Alak has laid out a detailed action plan in recent addresses. Key reforms include revamping outdated currency auction mechanisms, introducing advanced monitoring tools for international transactions, and forming partnerships with external audit firms to build institutional trust. These initiatives are aimed at reducing black market activity, boosting liquidity, and restoring public and investor faith in the dinar. Yet challenges persist. Years of financial mismanagement and political instability have left many skeptical. But early indicators show growing optimism within Iraq's domestic financial sector, where banks are preparing to integrate new compliance tools and adopt cross-border reporting standards. For IQD holders, each new policy signals Iraq's march toward becoming a credible, transparent player in global markets. Moreover, this movement is prompting similar expectations from holders of VND and ZWL, pushing governments in Vietnam and Zimbabwe to fast-track reforms to stay in step with global momentum. This isn't just about Iraq, it's about an emerging transformation of how the world views undervalued currencies. Experts are now calling this a potential currency triad of nations, each with resource-rich economies and reformative potential, on the cusp of global reintegration. Vietnam is piloting state-backed digital currency projects and enhancing Forex transparency. Zimbabwe has introduced a gold-backed digital token to stabilize its economy and re-establish market trust. Together, these efforts show that with the right institutional independence, legislative support, and commitment to modernization, even the most speculative currencies can evolve into globally respected financial assets. London-based sovereign wealth consultancy calls this moment a rare window of opportunity for forward-looking investors. The convergence of fiscal reforms in Iraq, Vietnam, and Zimbabwe presents both risk and potential, but most importantly, a shift from hype-driven speculation to evidence-backed investing. Leading economists are cautiously optimistic. Dr. Helena Marcus of the Global Currency Institute calls Iraq's monetary reform a generational breakthrough, emphasizing its potential to replace political interference with credible, technocratic governance. According to her, true autonomy over currency operations enhances global confidence and unlocks pathways for future economic integration. Currency strategist James Bartlett of Forex Intel Group agrees. His firm's models predict that if reform momentum continues, the Iraqi dinar could see measurable appreciation over the next 6 to 18 months. By 2026, Iraq may rejoin SWIFT, re-enter regional currency indices, and even become eligible for inclusion in global trading platforms. Meanwhile, off-market exchanges report increased trading in IQD, VND, and ZWL, particularly among niche investor communities. The old environment of baseless speculation is rapidly giving way to one rooted in real-time legal and economic data. This transition brings both promise and responsibility. Investors must now shift from passive waiting to active engagement, analyzing each policy change, monitoring reform progress, and adapting strategies accordingly. The era of rumor-driven investment is being replaced by a new phase of policy-based decision-making. After years in the financial wilderness, the Iraqi dinar is stepping into the light of institutional legitimacy. The CBI's expanded powers allow it to function not just as a national bank, but as a key architect of regional economic reintegration. If Iraq maintains its current trajectory, the dinar could gain a place in regional trade baskets, development financing structures, and bilateral trade arrangements. Vietnam and Zimbabwe are likely next. Their investors are now pushing for comparable transparency, digital infrastructure, and independent monetary frameworks. The transformation of undervalued currencies from speculative plays to legitimate economic tools is no longer theoretical, it's happening. As this shift accelerates, those who adapt quickly, think strategically, and stay informed may find themselves well positioned to benefit from a currency cycle that could define this decade. Disclaimer: this article is for educational and informational purposes only. It does not constitute financial advice. Foreign currency investment carries risks. Readers are encouraged to consult qualified financial professionals and conduct thorough due diligence before making any investment decisions. Like and subscribe for more videos.